Welcome back. It's the last lap of the show for today. I've been having a conversation with a business journalist, Paul Wallace. He's a reporter with Bloomberg Africa. He's still here with me on the program. Thank you so much, Paul, for sticking around. Just to quickly to say that Paul was part of a session that happened yesterday at on Broad Street, which is a venue of a one-day Bloomberg NSA Interactive Forum with bank CEOs, oil analysts, and executives, as well as energy analysts. Thank you so much, Paul, for sticking around.
No problem.
So, Paul, we're still talking about, all eyes being on the monetary authority at the moment. And next month, well, we're just a couple of days shy of July, the Monetary Policy Committee holds another meeting. From your own perspectives, what are you expecting to be the outcome of this meeting? Do you expect to see a change, for instance, in the stance of some of the rates, or do you expect to see a neutral stand?
We'll see. It will be a meeting that investors will definitely be watching closely. Most analysts we speak to say there's no reason or there's no room for the central bank to ease monetary policy. So they think that as far as interest rates are concerned, they say that most of them said that there's only two options really for the MPC. It either raises interest rates or keeps them at today's level. But I think probably of more interest to foreign investors at least will be anything that what the central bank says about the naira and the foreign exchange regime in place. They'll be watching that and hoping that there's some indication the central bank will ease the trading restrictions on the naira that are in place at the moment.
But then, do you see the central bank list? The list of items that importers can't get forex from them for. Do you see that list helping the forex market to expand? Do you see having that restriction on the kind of people who come to the CBN to get forex? Do you see that helping the market to expand?
Sorry, did you say if there was a devaluation or some easing of?
No, the Central Bank of Nigeria came out with a list of items that importers of this particular list cannot come to, the CBN, that's the IFM market, to get, forex on, but have to go, to the parallel market, for instance, to get it. So, do you see this helping the market to expand, the forex market to expand?
That's a difficult one to answer, and I guess we'll just have to wait and see with time. At least from the foreign investors I spoke to, their initial reaction was fairly negative. They said that this wouldn't, the measure the CBN came out with on Tuesday, this list, they said that wouldn't help the foreign exchange market. And in their view, it showed that the central bank is sort of intent on maintaining its grip on the exchange rate. Which they don't want to see. They would like to see a sort of looser grip and some weakening of the naira. So we'll have to see about that. The bankers on the panel yesterday, they said that while in the long term it might be a good thing because it would probably help boost Nigeria's local production of these goods, like rice and cement and things. They said that in the short term it would probably push people into the parallel market to source the dollars they need to import the items on that list.
Well, thank you so much, Paul, for joining me and sharing your perspectives on the program.
Thank you.
Well, Paul Wallace is a reporter of Bloomberg Africa. We're talking about some of the conversations that were held at the Bloomberg NSA Interactive Forum with some bank CEOs, oil and energy experts that happened on Broad Street yesterday. Just before we go on the program, let's talk about this recent report from World Economics, the UK firm dedicated to analysis, insights and data with regards understanding global economy. Now, their analysis of Nigeria's economy for the month of June showed that business confidence has continued to grow. So in spite of, the challenges we have in the economy, business confidence, which measures how sales managers expect the economy to perform over the next few months, registered a 95.4 increase from 89.3 in May, which is the quickest pace of increase in 4 consecutive months of rises. Now, it also shows that there's hope of greater opportunities for sales and development being the main reason for this higher sentiment. Now, for the month of June, business confidence, as I already said, grew, but both sales and market growth rose significantly. Take a look at the numbers for the market growth. It rose to 61.2 in June from 56.9 in May. It's basically, as a result of growth in buying and selling at the market. And all of this is despite the plunging oil prices that we've seen. Oil prices as of this morning are hovering around $63 and $64 per barrel. Now, this also marks a third successive increase in the value of the index and suggests that the measure of economic activity has bottomed out after the low point it reached in March, which was at 55.9 points. And let's quickly take a look at the headline sales managers index, which shows that it increased from 62.2 in May to about 65.2. So it also shows that a lot of confidence is still in the Nigerian space. According to the World Economics Chief Executive Ed Jones, he said the Nigerian economy grew again in June, registering the third consecutive month of increases. Now, all individual components of the headline index contributed to this increase that we saw. And business confidence at one time was actually at a low because there was uncertainty in the economic, in the polity with regards to the elections. But now the elections are over, what a lot of investors are doing are waiting to see when President Muhammadu Buhari will announce his economic management team, his cabinet, so that we'd get to know how soon policies will be formulated and what direction the economy will be taking. The markets are in a sit-tight mode. We've noticed that the all-share index, the Nigerian Stock Exchange, has been in a lackluster mode, except for the Treasury bills market and the bonds market, of course, which has witnessed increased activity from investors. The markets are continuing to wait for signals from President Muhammadu Buhari with regards to the economy. Now, conversations from Paul also, highlighted the fact that the banks as well are kind of wary and watching the economy as closely as they can. In spite of the fact that they have to lend, they also have to remember that they must stay afloat and keep their books in the green. It's a really challenging time right now for investors in the Nigerian economic space, and of course for investors who are also trying to make a little bit of money. But from the statistics from the World Economics showing that SMI has grown and the business confidence is still at it's still high, relatively high, we can expect to see in the coming days more businesses probably springing up. And of course we have to remember that there's still the bottlenecks, the bureaucracy that needs to be addressed with regards to registering the business and starting up a business and the rest of it. But all of this needs to be addressed in the coming days for the Nigerian economy to continue to grow. So in spite of the fact that we see oil prices falling, we see challenges with regards to paying salaries, somehow the other Nigeria's economy has continued to stay afloat. But that's the program for today. Many thanks for spending time with us. If you missed out on today's edition, don't forget you can watch it on youtube.com/channelsweb/Business Morning. And of course, there are conversations going online on Twitter. We're at This Morning, at Channels TV, or you can follow me at Harriet Agbeni. And of course, Bosun will be very happy to mind your business at Bosun Business. That's it on today's edition of the program. Many thanks for spending time with us. I'm Harriet Agbeni. Have a profitable day and a great weekend.